You can see some of the reaction in the 2-year, 10-year spread drifting downward over the last week. Let's bring in Beth Hammack. She's global treasurer at Goldman Sachs and the chair of the Borrowing Advisory Committee at the Treasury. Also here is not just any markets commentator, right?
Yeah.
Senior, at CNBC, senior markets commentary.
Clawed my way up through all the rest of them.
Do you think, I mentioned earlier, Mike, and we'll get to you a second, Beth, but I mentioned earlier, we're back at new highs. Trump has house money to play with again on his negotiations with we're back to,
It's been the pattern, obviously, but on the other hand, I think there have been, 220 new highs during this bull market. It's not as if as soon as we tick
there was
to
a lot of question
whether
we were going to get back to them again this time,
of course,
in the face of the trade war.
There's always a question. By the way, though, we did 1.9% GDP in the quarter when they started the rate cuts. It's not as if the rate cuts they've done, 3 of them so far in 4 months, have had any effect necessarily.
Maybe they will. People think they're not going to have any effect anyway.
Maybe not.
Pushing on a string. What do you think? We pushing on a string? They still work.
Listen, I think they still work. I think they need time to work. 3 rate cuts since July is a really short period of time. The economy takes a lot longer to work through it. And to your point on why the stock market is so high, I think this issue between Fed cutting and the trade war that's ongoing, I think those two things there's a lot of interplay between the two of them. And I think the stock market wouldn't be quite as high unless you had confidence in the Fed that they were going to continue to do their jobs to support the economy.
So that's not confidence, though, that this trade war is somehow working?
Correct.
Okay, just want to be clear about that.
What do you mean that it's working? No one's saying it's working. No one's saying it's working. I'm saying that it hasn't had the deleterious effect on the stock market that many people were hoping for or were
But I think that's only because you've seen the Fed come in and provide that accommodation.
Yeah, there's a lot of people. There are people hoping for a recession.
But listen to what Beth's saying. Part of the reason is because the Fed has been so accommodating. That's what's happening here.
They hadn't been at first. Okay, if you think 3 cuts make a huge difference, I think there's a lot of positive.
I will say Jay Powell's stance, compared to last December, or when things really started to go haywire. Look at what the Fed has said since then, and that calmed markets to a huge extent.
Right. Instead of a half-empty view of what's happening here, we're confronting China.
Not very well.
Well, you don't know that. We're confronting China. You don't know what the end result's going to be. I know everything's awful. Everything's awful.
You just said that Rick Scott was right, and then nothing would ever happen.
I'm not saying we don't try. I'm not saying that really tickles you. Look, Andrew, we're confronting China on a lot of issues, long-running issues. Decimating the entire Midwest. 70,000 factories have closed, stealing our intellectual property. In fact, most people think, and even your friends in the Democratic Party, Chuck Schumer, thinks we need these tariffs right now. So we're confronting all this, and we're still at new highs in the stock market. So at a time where you thought a trade war would have decimated the economy and decimated the stock market, we're still at new highs. So be happy that something might happen from this. That's a half-full view. Am I wrong about that?
Joe?
I think the view is that engaging in protecting the U.S. economy, the trade war that we're engaging in with China, I think there's a lot of good reasons behind it. I think your points are very well taken that for a long time we've been possibly taken advantage of.
And there could be a payoff down the road. Because what is it? You can't unscramble an egg. Everybody. It's front and center that China is unfair, and the WTO has not done enough to keep them.
That may be the case. I do think that it's definitely weighing on business investment, and it's definitely weighing on corporate sentiment. And so you haven't seen the level of investment by corporations into the economy that you would see otherwise, just because of the uncertainty that's out there.
And that is where the Fed is pushing on a string. The Fed can't fix that problem.
The Fed can't fix that problem. They can do as much as they can. We got this mid-cycle adjustment, 3 cuts.
Right.
That will definitely help, I think. But we need to give it time to wait and see how
we're at new highs, and we've also been impacted by the rest of the world is not helping us in terms of growth.
In a given year or 2 or 3 years, there's a lot of macro factors that can swing growth expectations as much as the trade war did. Right? If we got an oil spike, that would have been the pressure that the Fed said, oh, guess what? Things have changed. We have to adapt to that. What I think is telling about the markets is that in July, when the Fed laid out the idea that we're doing a mid-cycle adjustment, just a kind of temporary phase of rate cuts, then we're going to stop, the market rebelled against it. And it was not good news to their ears because they wanted the Fed to have a greater sense of urgency, to be open-ended easing. Guess what? 3-4 months later, that's exactly the bullish scenario right now is we got 3 rate cuts. Everyone's talking about 1995 and 1998 when we got that. So I think it's an attitude adjustment. The lower yields have bridged us through this soft patch so far. We'll see if it lasts.
Right.
Hey, guys, just real quick. It's a great discussion on trade. I just don't want to lose the opportunity. Beth is one of the experts in the repo market. She funds Goldman Sachs day to day. And I just need to ask Beth, are we in good shape going into the end of the year? Has the Fed provided enough liquidity? What about the idea that Mnuchin, the Treasury Secretary, talked about possibly changing the regulatory regime, and now we hear it's not going to happen? Give us your 2 cents on this critical issue here.
Sure. The Fed's done an excellent job in terms of providing liquidity and accommodation into the system. They've been buying bills to get the level of reserves up. They've also been engaging in repo transactions to make sure that there's liquidity flowing through the system. But year-end could be messy. Every year-end for the past several years since the regulations have been put in place, we've seen repos spike up pretty high. Right now, the markets would tell you that repo is going to print somewhere around 3.25% at the end of the year relative to that 1.5% Fed funds rate.
Does that relate to chaos in the equities market?
I don't think it's going to be chaos in the equities market. It's really the bond market that's paying attention to this. And what it means is that you're not able to get the cash from where it is in money market hands into the funds who need to buy treasuries, some of whom need to buy it on a levered basis. And so this is a space we need to continue to watch.